Hello everyone and welcome to the channel. What a crazy year 2021. We saw historical events beginning by the breakout of the virus, to the lockdowns, to the Fed quantitative easing, injecting billions and billions of dollars in the stock market and sending money directly to the public. That led to an unprecedented participation of the retail investor which drove the market to an all-time high. All these events are a wake-up call for us, as to view how we should participate and invest during 2022, which in my opinion it will be a totally different beast, totally different game from what we have been used in the last year. The 2021 year was marked by major things. First of all, the breakout of the virus. Second, the high liquidity provided by the Fed. And third, an unexpected event, which is the rise of the inflation, which rose at a level that the Fed has changed his rhetoric. The Fed start being more hawkish and pushing the brakes and drying out the market from liquidity. So let's start our analysis with the heat map. And I want to start with this S&P 500 1 year to date performance, as we see green all over the board. And I'm 100% sure that this green will not be there the next year. If we change to 1 day performance, we see a definite change in the overall performance. The overall performance shown the high multiple names such as Facebook, Google, Microsoft, Tesla start showing some weakness. Materials, utility, real estate are showing up some sign of life, some sign of green, which is the way and the theme that I suppose that the 2022 years will be based on. So let's move on to the charts and let's start with the SPY, the ETF trust for the S&P 500. We see that we have a bull flag and a topping in the MACD and slightly overbought on the RSI. That means that the chart will retrace back to 470, and during this week and during the course of this week we will understand the new sentiment in the market. But technically speaking, the chart will pull back to the resistance and then bounce higher. Let's move on to the Qs, the Nasdaq ETF, and we have here 397.05 is the center of gravity. We see the last day that we traded, the chart reached the support. We will see if the chart will bounce back, if the chart will resume its uptrend. That is a confirmation for the bull flag. If the chart will break the support and trade downward, that's a confirmation for a flash down and more pain to come in the Nasdaq. And then let's move to the IWM, the ETF of the Russell 2000 that track the small caps. We see the center of gravity is 223. Here is the bull flag caused by the center rally, and it's in a phase of consolidation. During this week we will be checking closely how the IWM will trade. around the center of gravity. But at the moment we see that it's bullish, and we assume that the chart will break to the upside. Let's move to the VIX with the daily time frame, and here on the VIX we should draw our attention to the fact that each time we have a crossing in the MACD, we have pop up in the VIX. Let's go to the Dixie. The Dixie is trading above the above the support of 95 with a bear flag, so bear flag and the consolidation. The confirmation will be after reaching the support of 95, and then we will see how it will react. Will it bounce to the upside, or it will cross through the support and then it will become a resistance? We go to the gold chart daily time frame, and we see the gold is struggling to break this resistance. We have 1, 2, 3, and this is the fourth. Is confirmation. This confirmed that 1844 is a strong resistance for the spot gold. A breaking over 1834, that means the gold will start rallying, and honestly I am bullish on gold. We have 1, 2, 3, 4 times knocking on the doors of 1834. The reason say that we will break through this resistance. Let's take a look at the 10-year yield. The 10-year yields is same thing. On the 10-year yield is building a bear flag. We will see during this week how the 10-year note will act. And now let's move to single stocks with Apple. As we see, Apple is on bull flag and consolidation mode. The company, they want to reach an all-time high of market cap. They want to reach the 3 trillion market cap. That means that we might see during the not distant future another leg higher, that we touching the 3 trillion market cap. In my opinion, after touching the 3 trillion market cap will be a flush down and a consolidation back to this range, the 170, 160, the 160, 170 range, around this box. Let's go to Tesla. We follow in Tesla because Tesla reflects the sentiment in the market. This is from my opinion. If people are way bullish and they are greedy, Tesla is crawling upward. If people are fearful, will flash to the downside. At this moment we have a very important support, which is 995, and if Tesla will break this support, it will be a big flash down till the 880 level. If the bull flag will play to the upside, we come back to the higher levels, maybe 1000, 1100, 1200. And finally, let's check Bitcoin. Bitcoin is very clear. It's on a we have a bear flag and we have a consolidation. I think the next move will be to the downside and we will reach the support of 42,000, and then from this point we will see how the chart will behave. Confirming the support and crawling upward, it will be bullish for Bitcoin. Going breaking the support and confirming to the downside, we will flash down in BTC. If you liked this video and thought that it was helpful, press the like button and subscribe to improve the channel algorithm, and follow me on Twitter. I apologize if this was a little bit of mumbling at the times and not being clear, but this is my first video and I hope I will improve in the future.